Welcome, everyone, to the Crazy Cryptonaut channel. I hope everyone is having a wonderful, wonderful Wednesday. And, well, welcome, Kukla. Thank you so much for being here. As always, I hope you're having an awesome one. And, oh, of course, Valentino is very photogenic. He does not disappoint when it comes to that one. I think he enjoys the camera more than any cat that I have ever met before. He seems to immediately perk up at the idea of getting that extra little attention. What is up, Gary and David? Thank you so much for the apple, David. And what's up, Weezer? Crazy Chester. Hell, happy Wednesday, fellow Kryptonauts. I'm ready to learn and then enjoy some whiskey. I'm looking forward to whiskey and wisdom as well tonight. Crazy. I feel like this Wednesday already feels like a Friday for me. It's been too much. The beginning of the week has already been enough of a week for me. I'm ready for it to be the end, personally. But luckily we do. We get to take a break and get some whiskey in just a little while. Well, y'all know for me it'll end up being beer or Medea, but the sentiment is the same. A little bit of relaxation. We all deserve it on occasion. What's David? And hello there, Karen Dunn. Neil coming in from Graham, North Kakalaki. Thank you so much for making it. And Mile High Trish. Y'all are awesome. Y'all are always here, and I greatly appreciate it. Greatly appreciate it. And I hope that everyone is starting to feel very, very comfortable with the general idea of cryptocurrency at this point. Maybe not understand all of it. We don't need to be there yet, but at least a general comfort with the entire idea that it's not quite as scary as maybe it once was. That is what I am definitely hoping. And then, of course, today, guys, we are going to go through and we're going to check on our Coinbase staking. And we're actually going to go through and talk about the process of unstaking, because we've had some stake tokens over there on Coinbase that are not making us any money. And so we're going to actually go through and start the process of unstaking them today. And then, of course, tons of news. There's actually a bunch of really interesting articles. And it's kind of like, as I was talking on Monday, guys, there's something coming out from either a central bank, a government, a regulatory agency. There's something huge coming out every day, it feels like, right now. There is a massive amount of effort coming from a lot of people and in traditional finance and who are in seats of governmental power at the moment, that are in a concerted effort, it would seem, to try and blame crypto or diminish crypto, or at least ensure that they have some form of control over it in the future. It seems as if things have really ramped up to a whole different level of intensity. All right, though. Kukla says, Pops told us you don't do whiskey, but he may talk you into it. LOL, beware. Kukla, I do occasionally do whiskey. It's just one of those things where I learned early in my life, in terms of that, right at 21, that whiskey and liquor, that it's not near as nice to me as beer is. Beer has never led me astray, and so I tend to just prefer beer. My body tends to prefer beer. But I don't mind whiskey. I enjoy the taste. I enjoy it every once in a while. I just choose to stay in my own to stay on my own level and on my playing field, which tends to just be that beer is a little bit better for me. David, what's your stake holding? Well, I'm more of a fillet guy. In all honesty, I definitely prefer my fillets over, say, a T-bone or anything of the nature. But I assume you're probably talking about our staking on crypto. And don't worry, David, we will check it out. And of course, everything on the Crazy Cryptonaut channel should never be viewed as financial advice, entirely for entertainment and education purposes only. Please do your own research, consult a professional financial advisor before making any major decisions with your financial future. Thank you, Kukla, as always, for ensuring I do not get in trouble. Weezer 58. Everyone from Missouri South and East, be safe and watch the weather. Pretty sketchy out there. Oh, no, I had not been informed about that one. We've been dealing with a lot of sketchy weather down here in Puerto Rico, but sounds like things are a lot worse over there on the East Coast. North Carolina tornadoes just going through our local counties: Cleveland, Lincoln, Gaston, Mecklenburg. Oh, no, it sounds like it is no fun to be in the Charlotte area right now at all, Karen. I spent far too much time sitting in traffic in Mecklenburg. I have experience there. Went to work in Charlotte right after college. Spent about 3.5-4 years there, working for a tech company, and oh my God, I cannot explain how much I dislike Charlotte, North Carolina. The city is great. It's the traffic. An hour and a half, 2 hours to get to work each morning, an hour and a half, 2 hours to get home each evening. That's pretty much adds up to half of a full work day. Just sitting in the car. I can't handle it. All right. So, yeah, things go sideways quick with liquor. Yeah, that they do, Weezer. That they do. I stay in my lane. It's safe in my lane. And it's always more fun too. Then I get to laugh at everybody that is partaking of the liquor when they get a little bit silly. I get to be the one that reminds them the next day of how things actually went. Neil Brooks, I'm still trying to figure out if I put my receive address from my Ledger wallet, can I receive payments on my invoices? I didn't know if the receive address was static. Neil Brooks, so when you actually get your public wallet address from, say it's your Bitcoin wallet. We'll just use that as an example. Your Bitcoin wallet on your Ledger hardware device. That wallet address will always stay the same. Always. So you don't have to ever worry about having it out there as a means for someone to pay you for a good or service. The only thing that I would say is to make certain and keep in mind that when you put your public wallet address out there, you are allowing anyone that has that public wallet address and knows that it is Neil's, so you sent it to them. They know that that is Neil's public wallet address. It does mean that I can go through and look on the blockchain explorers and look throughout the blockchain, and I can see everything you own, maybe how much money you have or what you buy. Or anything of that nature. And so that's one thing to take into consideration. When you are putting out your public wallet address, you're not in danger of them stealing your money. But if you say you had a lot of money sitting on that wallet, you may make yourself a target in that sense, or you may just not appreciate people knowing what you buy and what you own. And so that's the only thing that I would say, Neil, is that when you are putting out that wallet address, keep in mind, if it's someone like me that knows how to go through it, I can just immediately go through and figure out everything Neil owns that's connected to that wallet. And so it's not really something that's important. It's not like it would mean that someone had access to your wallet. But, I had someone the other day make the whole description. Well, what if somebody asks you for money? Somebody needs a loan. Somebody in your family says, I'm on hard times. I need a loan. And you send them the loan, and they look at your wallet and they're like, you have $100,000. Why don't you give me more? It was a niche explanation or a niche example, but that was the one that was presented to me. And I was like, well, and yeah, in that sense, you would want maybe to not have everyone know how much money you have. If you ever enter into a situation, Neil, and this is another thing just for anybody, if you ever have a situation where you want to send someone cryptocurrency, but you don't want them to know what cryptos you own, what you can very easily do is you can send your crypto to a centralized exchange like Coinbase, maybe as an example, and then you would send that person the payment from Coinbase. Now they would have zero connection to your wallet. They would not know how much money, how much crypto you actually personally held in your own control. I have used this before when I was paying for different services, and I didn't want the other business to know how much money we were working with, things of that nature. So it's a little tool or a little workaround that can come in handy every once in a while. If you ever want someone to not have any idea how much money you have, send it to a centralized exchange account, withdraw it from the centralized exchange account to their wallet, and then you would have created a situation where your money essentially disappeared the second it entered into the massive pool of other crypto tokens and coins that the centralized exchange owns. So, kind of went off on a tangent there, Neil, but it led to a little thing that I do think it could serve some people in a specific moment where they do want to make certain that no one is able to see how much money they got. What is up, Pirate to Godly? Glad that you could make it. And good evening, Donna and Bear. Thank you guys, as well as Maria. Kukla 21, do you laugh at Pops? All the time. Yeah, we have a very, very good relationship in terms of being able to give each other a hard time about things and and enjoy it. Big boys, any idea why precious metals are tanking presently? Usually whenever it comes down to precious metals, I would point directly to the paper markets. I would directly point to the fact that we've likely seen a lot of rotation of people out of traditional finance over into paper markets, and I would go ahead and place an educated guess. It's big boy that it is a lot of financial institutions and banks playing around with the supply of silver and gold. One of the important ones that when I was talking with Andy about it, and it ended up being something that he mentioned on the show, that it takes 500 ounces of silver to make a Tomahawk missile. Or no, actually, it's a Predator missile. A Predator missile is 500 ounces of silver just in the tip, the warhead of the actual missile. And I do think that really, when we look down at it, is there a major reason right now, big boy, that we need to have the prices of silver and gold be lowered? Well, if we were to look at a lot of different governments at the moment, they're trying very hard to get their military industrial sectors ramped up. And what would be particularly bad for them would be overpriced silver and gold. That is a necessary component in creating their vehicles of doom. What is it? I heard someone else that the United States government doesn't invest in healthcare. We invest in unhealthcare. And that was his joke about the amount of money that we spend on the military industrial complex. And I would point to that exactly. I would say that it's they're taking advantage of paper metals, and they are pushing the price down because we currently have insanely high demands for military components. Unfortunate if you're on the receiving end of all of these missiles and everything else. Particularly unfortunate. I am doing particularly well there, Jorge. I hope that you are doing the same. And Gary, Valentino is doing well as always. I'm not certain where he's actually hiding at the moment. Usually he doesn't spend this long without getting a little ornery with me. Yep. Pirate Too Godly makes the boomsticks more expensive if the price goes up. Exactly. And if there's anything we can guarantee that our government cares a whole heck of a lot about, it's making certain that the price of boomsticks stays low for themselves. They love passing rules and laws to crank up the price for us the average American to utilize our Second Amendment rights, but they tend to always find a way to ensure that that their weapons don't end up becoming too pricey. Tim Fu, will there be a window of opportunity for investment in crypto post RV, and how long will it last? Tim Fu, I actually imagine that if we were to look at this thing on a grand scale, that everything is going to end up with time in between. But the degree of uncertainty and fear that will exist in the markets will most likely scare the vast majority of people away from taking advantage of those opportunities. Think about the same way when we look at, an actual crash. So 2020, what was it? March of 2020, when we saw the COVID lockdowns and everything else announced, and we saw stocks and cryptos absolutely plummet. What should the average retail investor have been sitting around and doing at that point in time? They should have been sitting there trying to buy. But that's not how the human brain works. It's not how our psychology is rigged up. When we start to see that degree of fear and uncertainty, we tend to not act. We tend to take a very, very passive, a very defensive mindset. And so, Tim Fu, I would imagine that all of these things are going to result in time gaps where we could technically participate. We could technically roll over money or take advantage of a market opportunity. But keep in mind, 99.99999% of all people won't, because we're going to be dealing with an extremely uncertain, new, scary world of finance at that point in time. And so most everyone is going to be sitting around on their bank account. Imagine Scrooge McDuck, well, with all the doors locked, and he's ready for a zombie invasion. That's what 99% of all people are going to do when things get sketchy. Everybody's going to hunker down. They're not going to be willing to spend the money. And so, Tim, I think there will be opportunities throughout this whole process to maybe double dip or however you want to look at it. But I imagine that for the vast majority of everyone, they won't be participating just because of the fact that it will be an extremely uncertain and scary time for 99.999% of all people. Gary 7, what are politicians doing for themselves concerning crypto? Actually, Gary, that's a great question, and we actually have some articles that go over that one today. And so we're going to go ahead and jump into that, guys, because we do have a lot of news that I think everyone's going to be interested in today. And our first thing that we need to go in and do is just see how the markets are doing on a general level. And also, we have to do some unstaking real quick, because I am not happy with our returns on some of our Coinbase stakes. So first things first, where are we at in the market? Well, we were having a particularly green day. That green day has turned particularly sour. And so at this point, we are seeing Bitcoin on a steady downturn at the moment, trying to go back down and test again at 60,000. I imagine that it will test again at 60,000. Whether we break through the resistance and we drop back into the 50s or not, I would not gamble on either side of that one, but it is extremely likely that we do see 50,000 again. In terms of the long-term metrics, we're not seeing anything overly negative. Keep in mind that we do have this looming threat coming from Mt. Gox and coming from the SEC. Remember, Mt. Gox is what we talked about on Monday. These are people that are about to become overnight millionaires. Their money was stolen in 2014, 2013. They're finally getting their money back. What are they going to do with it? That is a huge question mark looming over the market. About a $9 billion question mark looming over the market. And so that is one thing to take into consideration. But otherwise, we're not seeing anything particularly negative on the long term. Matter of fact, we see the ETFs are actually back to buying again. Exchange net flow is looking good. We are seeing Bitcoin still kind of flooding into the exchanges. And so there does seem to be more sell pressure on Bitcoin than on Ethereum and some of these other cryptocurrencies. Maybe that is on account of the Mt. Gox payouts already. Maybe that's on account of the amount of traditional investors that got into the market, compliments of it being more regulated and having ETFs. Maybe that's what's happening. Or we could just be seeing a general shift away in terms of the market towards a little bit more of a speculation on some of these different altcoins. So something that we cannot really sit here and make an extremely educated guess on at the moment, just because we don't have enough information. However, we are seeing a general trend now of traditional finance, and retail investors are jumping back. And of course, still Korea, whenever they have that number in there, they just mean Asian markets. So US and Asian markets are unhappy faces today. And in terms of the general amount of purchases that we're seeing come from small holders, seeing the vast majority be the ETFs. Now, to get on over here to our Coinbase, guys. So first things first, I went ahead and let this little announcement stay up there so that we could see it. They have introduced bracket orders to Coinbase. Now, bracket orders allow you to buy / sell at specific limit prices and set a stop price to limit losses due to market volatility. It allows you to go ahead and go in and set up a buy price and a sell price on a crypto. I would say that for the vast majority of everyone watching, that is probably not a tool that is overly useful. That is definitely more of an advanced day trader type thing to use. But they've got it now, so no, we read the little message. Otherwise, we're going to come on over to Earn for today, and we're going to go through real quick, and we're going to notice that look what changed. Remember, Polkadot was paying 9.47 just a couple days ago. Polkadot is now paying 13.97 according to the earning rate APY. So that was a massive, massive jump in terms of the past few days. Remember, these numbers are being calculated by Polkadot, by the companies in particular, not by Coinbase, and they are not guarantees. They are approximations. So we are seeing a massive shift here. Matter of fact, Atom, Cosmos up to 13.27%. Matic has almost doubled to 3.57. XTZ is actually down on APY. I believe Ethereum is slightly down on APY. Otherwise, we're seeing pretty much the same here from USDC and Solana. But what we're going to do today is we are going to go ahead and unstake our Tezos. I'm not happy with the general return on it. Keep in mind, we had about $12 in here. They're telling us we're going to get a 4.47. We've received 2 cents in over a month. Let's come on over here to any of the other options. We see Solana at 5.27. We're coming in at 7 cents. So difference between what they claimed was essentially less than a % difference in a year has resulted in essentially a tripling over a 3.5x in terms of the return. And so we are going to actually unstake our Tezos. And this is a good opportunity for everyone to keep in mind what staking entails. Remember, when we unstake, we are going to experience an estimated 2 days before we actually get our XTZ back. And so we're going to go ahead and initiate it right now. We're going to unstake all of our Tezos. They're going to send it back to our primary account. They're telling us that the estimate, it's just an estimate. So after you submit your request, you'll need to wait until your XTZ is fully unstaked before it can be sold or sent. The Tezos network does not have an unstaking period, but it may take us up to 2 days to securely unstake your funds on chain. Once requested, unstaking can't be canceled. Your XTZ will continue to earn rewards during the unstaking period. Okay, we understand. Let's go ahead and click unstaking. All right, perfect. So now we actually come on over and we see now in our earn section, we saw that we are unstaking XTZ. And so you can see we have a pending, about 2 days left. In about 2 days, we will receive our 12.64 XTZ. And so now that we've done that for Tezos, we're going to actually come back. It's a good question there, Pirate 2 Godly. So I'm going to answer that, and then we'll go unstake the next crypto. The reason that these APYs are calculated the way they are is because they are based off of the proof of stake nodes. So remember, the same way that a Bitcoin miner has a bunch of computer devices. He has a bunch of computers, and they're all solving mathematical problems, equations, in order to mine Bitcoin. Well, in the situation of a proof of stake mining network like Polkadot, like Tezos, like Cosmos, they're all proof of stake networks. What occurs is you put your money into the staking pool and you say, all right, you can hold on to it, and I want you to use it as essentially collateral towards me being trusted as a miner. And so each different blockchain has different reward percentages. So Ethereum has a ton of miners. There's tons of miners. There are billions of dollars of Ethereum locked up that are mining Ethereum. And that means there's a lot of competition. Competition drives down the price. As competition drives the price further down, we see a distinction between some of these other networks where there's maybe not as much competition. Over here on Polkadot, we see that Polkadot it's at 13.97%. This number can change. It will change, as we've seen. But we can see there's a drastic difference between staking your Polkadot into proof of stake or staking your Ethereum into a proof of stake node. These are going to be different for every single different blockchain. And so in the case of Solana, we see that, 5.25, Atom 13.25. Each one of these is not really a matter of, they're not equivalent. They're not tomato. They're not potato. They're entirely different blockchains. And there's a lot of differences in terms of the general degree of competition on each blockchain. So on Polkadot, what I am seeing when I see a high number on a staking contract is I am seeing that they really want my money. They really want my money. And so they need my money, or they wouldn't be offering such a high percentage. It wouldn't be being advertised that way. I look at it, and then I look at Ethereum, and I say, well, okay, Ethereum, 2.52%, they really don't give all that much of a crap about my money. They have tons of money already. They have tons of miners. They have tons of interest. They have tons of quote-unquote customers, in which case they do not really have the same incentive to incentivize me. Whenever you see a higher percentage, Pirate, and it's just a good thing to always keep in mind, regardless of whether it's cryptocurrency or traditional finance, when you see a higher percent return, it means the risk has increased. The risk is a direct correlation with the general return that you receive on a yearly basis. It's that way in every investment you'll ever find, at least that I've ever found in my life. If it pays a lot, it's because there's an inherent degree of risk. With Polkadot, that risk could be just based off of the general price of Polkadot. Same thing with Solana in terms of their return rate, or Atom in terms of their return rate. What I am really excited about, and that we did finally get to learn just recently, is to have gotten our first earnings from USDC. And so remember, USDC is just a stable coin, and your USDC on Coinbase is not actually even staked. There is no withdrawal period. All I do is have US dollars here, and I earn 5.10%. So I actually went through and did the math on my 11 cent earnings off of 26.55 And what I ended up finding out was that on a yearly basis, currently the math is coming out to about a 4.97% yearly return rate, not considering compounding interest each month. And so at just a flat, I am keeping my liquid dollars on the Coinbase exchange. They're just US dollars. I'm just leaving them there. I can have them whenever I want. I am looking at earning about 4.97% on a yearly basis. And that was the reason that this was the one that I remained so interested in as we were learning about Coinbase staking, is because this is something where it really doesn't make any sense not to have your money participating in it. If your money is sitting in your bank account, it could be earning about 5%, because 4.97, about 5% per year, without having any degree of a staking period or a holding period, or you being left illiquid in any form or fashion. And so this was one I was really interested in, and I'm excited to now have these numbers finally for our first month. So for our first month, our $26.55 came in at 11 cents in 1 month, and calculated on the long term 4.97 per year, not taking into account compounding interest. But let us go ahead and unstake some of the rest of these, because Matic is another one where I am not happy with my 3 cents. I would rather get my money over into a different cryptocurrency. But look, right here, we're looking at an 8-day unstaking period on our Matic. That means that this is something where if the price of Polygon had just drastically skyrocketed in the past day, and I really wanted to sell my holdings, I would be I wouldn't have that opportunity for at least 8 days. This is something you have to take into consideration when you stake. You have to be ready for the repercussions of how long it takes for you to have access to your crypto back again. But we're going to go ahead and start that process, unstake all, and we're going to get our Matic sent back over to us, just because it's not paying enough. The percentages don't add up. It's not earning at the same rate that the other ones are. And I would consider it at this point for the experiment to have run its course. We gave everybody a month to see how much they ended up returning. And from what we have found, we would see that Ethereum actually out-earns its percentage. So Ethereum is paying slightly higher than its advertising. It's still on the lower end, but it is paying slightly higher than its advertising. Atom it has turned out to be a particularly solid one, but I have a big problem with a 25-day unstaking period delay that we're going to see from it. Our Solana is earning at an incredible rate, considering the amount of money. So Solana is actually outpacing its APY. It's paying every 3 days. It's only got a 5-day unstaking period. I'm not touching the Solana. It gets to stay. I'm happy with it. And our big winner is Polkadot. Polkadot has come in at 13 cents with only $14 invested into it. And this has been 1 month of earnings. And so if we actually take this one and extrapolate it out, Polkadot is beating the previous 9%. That's probably why the APY increased, because according to my math, they were coming in closer to 15% yearly. So Polkadot so far has been our big winner when it comes down to it in terms of the actual passive income. USDC has met my expectations. Solana and Atom, I'm happy with. Ethereum, in all honesty, we probably should rotate this money out, but it really is not doing poorly. And I'm curious to see what happens when we run this experiment a little bit longer, because it seems to be outpacing the math. And that means I'm curious. Could we actually end up making more than just the 2.52% yearly on our Ethereum staking? So I'm going to let it roll. But otherwise, we have just started the process, guys. So for anybody that did want to understand how that worked, the in and out, we are going to be able to see this in real time. And so I'm hoping on Friday, during our Friday stream, I will be able to show everyone our unstaked Tezos. And then, of course, 6 days after the Friday stream, I hope I'll be able to show everyone our unstaked Matic as well. All right, though. Now that we have jumped into that one, seen how we're doing, we're at a rockin' 49 cents with an average rate of 6.51% yearly on our staking with Coinbase. I had to say that I'm particularly happy with that. Let's check our, what the heck? For anybody that has not checked your learning center on Coinbase, I would highly recommend you do it. I have $44 of free money that I'm going to be able to go through and earn this evening. And so that was a nice little win. I will take those earnings and throw those over into our staking and reallocate more into the ones that are earning us more. But so for anyone who has not checked their learning tasks on Coinbase recently, I would highly recommend doing it. It seems as if we have been given a brand new set of classes to go through. So definitely, guys, $44 may be sitting on the table in free money for you this evening. That is not bad. It's not bad. Hey, Kugla says, woo, awesome drinks on Zester. Heck, yeah, you can. $44, you can buy a decent bottle of whiskey. That is not too shabby at all. So definitely, guys, check that one out. I am glad that I clicked on that real quick. I had been not following my own advice. I had not been checking the learning rewards often enough. It's probably been a week or so. I could have already had my money. All right, though. Jumping to our next one. Guys, this one I thought was just interesting, so I, of course, had to include it. Between days in court, Donald Trump will meet crypto enthusiasts for NFT dinner. Anyone who spent at least $4,653 on Trump's mugshot NFTs will be able to have dinner with the former president in Florida on May 8th. I thought this one was just particularly interesting, and I knew that everyone would probably enjoy it, as it was such a silly thing. Purchasers of a mugshot, non-fungible token NFT, released by Donald Trump, reported that they plan to meet the former United States president at his Florida residence for dinner. Thought this one was particularly fun. And of course, the NFT, the NFT itself, everyone in the community I know is more than well aware, probably already has a t-shirt with the mugshot on it. But people tokenized and created an NFT of Donald Trump's mugshot, and then they sold it in order to raise money for the Donald Trump legal fees and election campaign. And now he is going to be going in and getting to hang out with some of the people that contributed money. I wish I had bought one. I would be very, very happy to have that opportunity in Mar-a-Lago, but unfortunately, I did not spend the nearly $5,000 necessary to buy the NFT. But this article will be inside of the daily links in our Discord, guys. So please do check that out. I hope that folks that are interested in learning more about some of these different topics are going over there and checking that out on the Discord channel. It really is. It's over here each and every time after we get done, where you can come in and you can read the articles from the previous episode. You can see the articles that we just went through. There's some extremely interesting ones that we've started to put together. There's a lot of a timeline of news and information that is starting to get established over here. So anyone that does want to check those out, please do go over there. Getting over to everyone's favorite Democratic political donor, SBF. FTX says it has billions more than owed to victims. And so this is extremely good news for people that had their cryptocurrency, had their money sitting on the FTX exchange. it appears at this point in time that FTX is not only going to be able to pay people back, it's going to literally be able to recompensate people for the delay in terms of getting paid back. A lot of this is on account of the fact that crypto holdings held by FTX have gone up over the past couple of years. And so they have entered into a point where they are liquid enough. They've got enough liquid dollars to pay back everybody in full, plus some extra funny money for I suppose to give someone it back as payment for their pain and suffering, having to wait 2 years to get the money that was rightfully theirs. So that is an interesting one. Can't say that I expected FTX to actually manage to make it happen. So yeah, another one. FTX has billions more than needed to pay bankruptcy victims. Crypto customers to get interest on what FTX owes them. So not only do they get paid back, they're going to be making money by having had their money stolen by SBF. That honestly, this is pretty much as golden of a goose of an ending to that saga as I could possibly imagine for your average retail investor. Your average retail investor was sitting there thinking their money was gone forever. Now, not only are they getting their money back, they're getting paid an interest rate for having lost it for a while. So I'm very, very happy for all the people that were stuck in that situation. And here we go with the actual number. Nearly all FTX creditors will get 118% of their funds back in cash, estate says in new plan. 118%, 18% return in 2 years. Compliments of the Biden economy. That return rate is not that great, but any other economy in human history, 18% in 2 years would have been viewed as a absolute slam dunk. So very, very happy for people who were on the receiving end of that. I was never an FTX fan. Never had to worry about losing any money because I didn't trust the exchange in the first place. But I'm happy to hear that the average American, the average investor is going to get paid back and actually make a little bit of money for their suffering. All right. Now we get into, I think what you had actually brought up earlier, Jorge, in regards to U.S. regulators and governments and these different banks trying to protect themselves. Proposed U.S. Blockchain Integrity Act would ban crypto mixers for 2 years. The bill introduced in the House would impose a fine up to $100,000 for handling funds from mixers, while the Treasury writes a report. And so what they are saying right here when they say the term mixer, what a mixer is in cryptocurrency is it is a software program that, and I think we talked about this one, but it was during one of the other live streams and it was only for a short minute. And it was in reference to Tornado Cash that we were talking about at that point. But there are other mixers in the world. What a mixer is essentially I go to it and I send it crypto. And I tell it that I want it to give me that crypto on an entirely different wallet eventually. And what then occurs is my crypto goes into the quote unquote mixer. Imagine a blender, and you just put one strawberry in. My strawberry just got mixed into all the other strawberries. You're never going to be able to give me my strawberry back, you would imagine. What a crypto mixer allows to happen it allows you to put all those ingredients for a milkshake into the blender, blend it all up, and then shoot out a whole strawberry on the other end to another wallet that's not connected to the first wallet that originally actually sent crypto over to the mixer. And so it allows you to essentially money laundering on a whole different level. It allows you to hide any and all transactions from everyone on the planet. And so, of course, the U.S. government's not a huge fan of it. Now, would I have to agree that this is a technology that requires some degree of regulation and oversight? Absolutely. It requires some degree of oversight. But we are seeing the US government kind of take a blanket approach. And rather than exploring the technology, attempting to regulate it, they're just like, nope, nobody's allowed to participate. And so anyone who actually ends up taking the money, and so this is what's devious about the law, is that they're not mad at the company that provided the mixer, that provided the technology. They're mad at the person that accepts the money after it's been mixed. So, say you're just the average business owner sitting in, sitting where we're in Middletown, America, and someone comes in and they go to spend money and buy a product at your store. Well, is it your responsibility to go out and find out whether that money ever went through a crypto mixer or not? Of course not. It's not your responsibility in the slightest form. That would be anybody but your responsibility. And so this actual law would make it your responsibility. It's your responsibility that you took money that went through a crypto mixer and allowed them to exchange them in your store or establishment. That is the point that I disagree with the law on. I don't disagree with the general idea that we should probably regulate an extremely, extremely efficient money laundering tool. We should keep an eye on it. What we shouldn't do is go around and blame everybody besides the actual criminals, because this act would allow for the United States and for the regulatory bodies to essentially go through and audit anyone at any time to check to see whether their crypto or their money had ever been mixed. That is an overreach to an extreme degree. That's an extreme overreach. Should they be keeping an eye on this technology? Yes. Should they be coming in and be allowed to go into my financial history for no other reason than just the possibility that 1 cent of my money that wasn't even my responsibility at some point in time went through a mixer? That is a massive, massive overreach. And so another thing for everyone to be keeping an eye on as we see not only the US government, but international governments continue to wage war and a witch hunt against anything and everything that is decentralized finance. And for everyone that is really sitting there and thinking about what future do we all need to see? We need to see a decentralized future. If we want to see a world where the governments, the central banks, and the corporations no longer are able to take advantage of us, no longer are able to control our freedom of speech in terms of how we spend our money, we have to be envisioning a decentralized world. And we see governments one after another doing everything in their power to try and keep us away from that. Going back to the saga of Binance and Nigeria, remember, they still have our IRS officer. And so if anybody wants our IRS officer back, apparently Nigerian government, well, they're denying it, of course, but Nigeria's federal government refuted claims from Binance CEO Richard Ting, accusing officials of demanding a significant payment to resolve ongoing disputes. So Binance was given an opportunity by the Nigerian government to pay a bribe to have their person let go from Nigerian prison. Do I personally believe that Nigeria's government did this? Absolutely. I believe they did this. It's an extremely corrupt government. I have literally no doubt in my mind that Binance is not lying and that this is factually true. So now, if anybody would like to buy back a IRS officer, a U.S. citizen, it will only cost you $150 million to buy back one IRS officer. So I don't think they're going to have any luck getting Binance to pay or getting anyone to pay in order to get back the poor guy. I feel bad for him. He's just doing his job. but I can't imagine paying $150 million to get back an IRS officer. So that one I thought was particularly funny. Not funny if you're the poor guy sitting in Nigeria's prisons, but funny if you take a step back and just look at it on the general level of how desperate the Nigerian government must be for money if they're willing to start essentially trying to extort some of the largest cryptocurrency corporations on the planet. All right, though, looking at things that are not a good sign in terms of just the general growth from the big dogs in the crypto industry. MasterCard joins forces with U.S. banking titans for tokenized settlement trials. This partnership between significant banking giants in the United States and MasterCard aims to streamline multiple asset class settlements on a shared ledger platform. This sounds very much like what Ripple is building. So, payment processing and settlement firm MasterCard has joined hands with major banking institutions in the United States, such as Citigroup, Visa, and JP Morgan, to test distributed ledger technology for banking settlements using tokenization. Guys, it's happening. It's happening. There is a reason that every single time we jump on and we have a stream, there are brand new articles and brand new corporations and brand new partnerships occurring between the financial giants of our planet. Things are going into overdrive when it comes down to the shift towards trying to get us all to move into the realm of a digital currency. Time is up. It's happening. We're seeing it everywhere. We're seeing governments try to destroy decentralized cryptocurrencies, while at the same time, we see governments trying to reinforce centralized cryptocurrencies. The battle lines are being drawn in front of us. All right. And look, not only is it becoming important for the financial talking heads, over 20% of voters in swing states consider crypto a key issue in U.S. elections, according to a recent survey. And these primarily, the vast majority of the general interest is coming from swing states. And so we're seeing it more often in the Ohios, the Iowas, the Virginias, the North Carolinas, the states that could swing in either direction. We're seeing a general interest in crypto. This is going to just keep going up. Right now, it's 20% of voters. I would imagine next election, we're looking at 40% of voters. And then move all the way forward to 2032, it will be 100% of voters will be considering cryptocurrency to be the most important issue on the docket. Right now, it's just a measly 20%. But think about how far we've come in just a matter of a decade. You know, we've gone from Bitcoin being a nothing, an absolute nothing, a nerd's plaything, to becoming something that is controlling global finance. Imagine what it's going to start to look like when everyone is on board. And it's happening. All right. Now, Kukla, thank you so much for joining us. And don't worry, I'm actually going to be kind of speed running through these last ones also, guys. So please bear with me for just 1 second. Got a little distracted talking about everything earlier, but I do want to make certain that we at least get through and hear a little bit about what the traditional finance guys are saying in regards to Bitcoin's price. This article I ended up going through, and to me, this is actually one of those ones that I would use as an example of what I very, very often see, where a whole bunch of nonsense and absolutely no meat to this. This is a hamburger that looks like it's piled with real beef, but it is an absolute nothing burger. All they managed to get to is literal insanity. I don't trust these guys that draw lines all over charts and and effectively have the general success rate of a meteorologist in terms of being correct on the weather when it comes to financial markets. I would always keep an eye out for these. It's not to mean that they won't be right. They easily could be correct, but also a blind squirrel finds a nut every once in a while. And that that I think is probably the more logical explanation about why they're occasionally correct. Key Bitcoin indicator points to period of calm in crypto market. BTC's volatility risk premium. Think of this the same idea as the volatility risk in terms of the traditional stock market. They've got one for Bitcoin. Has collapsed and a sign of a market trending towards stability, where future uncertainties are less of a concern. And so we are seeing a general disconnection from the actual holders of Bitcoin and cryptocurrency from the overall financial calamity that is our modern economy. We're seeing less people in crypto worried about the fact that the global economy looks like crap. That's a great sign for crypto holders. That apathy is probably an extremely negative sign for traditional markets, because it means that essentially a vast majority of investors are now looking at traditional finance and saying it doesn't matter. It doesn't matter. We don't care. We don't care what the value of your Apple stock is. We don't care. We care what the value of gold, silver, crypto, and property is. We care what the value of oil is. We care what the value of nickel and lithium and copper are. We don't care what the general value is of your John Deere. That in and of itself is a bad sign for traditional finance, a great sign for people that are looking towards a world where our money and our finances are a little bit more concrete and actually backed up by things that are real world. Oh, Tim Fu, are you on Whiskey and Wisdom tonight, sister? I will be on Whiskey and Wisdom, Tim. And so that's why I'm also kind of jumping through some of these real quick, is because I will be on there as well. And so let's speed through the last of these so that I can start getting myself prepared for some beers and wisdom, cervezas and wisdom, maybe. So, House poised to vote on erasing SEC crypto policy while President Biden vows veto. I don't know. To me, the reason I actually brought this article up is because, is there anyone on this planet that thinks Joe Biden understands anything to do with current SEC crypto policy? Because if you can find that person that believes President Biden understands how any of this works, I have got a ton of oceanfront property in Utah that I would love to sell them. And so please, please send their email, send their phone number. Whoever believes Joe Biden has any understanding of how SEC crypto policy works, I have got business opportunities that I would love to present them with. So for anyone that does, please jump into the Discord, jump into the comments section, leave the contact information for anyone that thinks that Joe Biden understands what's going on in the White House, in the country, in the world. Joe Biden is trying to keep up with what's going on with himself, much less having any amount of mental capacity for dealing with the rest of the world. So I thought this was just hilarious that they somehow managed to get Biden to go up there and say veto. He must have been offered a lot of really good ice cream. All right, jumping over though to our last ones. These are actually both two articles that I really just wanted people to have the links to. And so this is My Traumatic Apple ID Hack Showed Pitfalls of Centralized Identity. And so this article goes through and discusses how this guy was hacked. He had the vast majority of his identity and everything stolen. And the reason that it was possible is because all of his information, everything is held on a centralized server. Apple essentially had control over everything. And so he gets hacked. He calls Apple. And Apple goes, sorry, you're just going to have to accept your losses. and he trusted a corporation with his money. And he ends this article actually with a highly prophetic little quote down here. After experiencing the ruinous impact of having my digital life stolen in the blink of an eye, I believe there's only one answer: decentralized identities where personal data is fully encrypted and stored in a secure wallet. This is the future that this technology allows. This technology allows a future where we could all be safe. And this article is an excellent explanation of why it is so important. So please do check that out if you are interested. And then, of course, how a decentralized AI movement is shaping a fairer future. Both of these articles really tie in together. This one in particular is talking more about how the fact that artificial intelligence is something that we also need to be worried about governments or corporations centralizing control over. And guess what? Blockchain and decentralized ledger technology would allow us to have artificial intelligences that were not centralized and were owned by everyone. And so all of these things work together. With this technology, we're capable of creating a world where we no longer have to trust Wells Fargo or our central bank, the Fed, to have our best interest at heart, because we know they don't. And that's why all of this is so momentous. And it seems as if we are getting into a point in time in human history where history is about to start moving very, very fast. Usually when you look back at a history book, there's always those gap years where you read the history book and the history book says nothing happened. We know that's not true. You know, we know that tons of things happened during that time. But history moves at a snail's pace until suddenly it moves at NASCAR speed. And so it seems as if right now we're going through one of those Mach 5 type situations where now we have history moving at an extremely fast pace. And we're seeing the very world around us change in major ways in terms of how things are going to look in the very near future. So please do check out all the links over there on the Discord, guys. Thank you so much for tuning in. As always, I deeply appreciate it. Please do consider a like, a subscribe, a thumbs up, a thumbs down, a comment, whatever it is that I'm supposed to say in regards to that one. I would appreciate it. And I cannot wait to get to talk to everybody in just a little bit of time over on the original Mark Z for Whiskey and Wisdom tonight. I think we might actually have some fun topics to go through. Hopefully we keep it nice and lighthearted this Wednesday. Not interested in anything other than some fun stuff, in my opinion. And so 1 second here, because I did just see that comment asking for the Discord link. And so Brian Rice, there is my link tree right there. And so you can actually jump in to the Discord. And once you are in there, you can then go through, leave a ticket if you want to talk directly with me, or just start hanging out with everybody. You can even go in there and start listening to music in the concert room. So, well, be happy to see you over there, Brian. Happy to. So thank you guys so much. I hope everyone is having a wonderful Wednesday, and see you soon over on Whiskey and Wisdom. Evening, fellas.